All right, everyone. It is 10 a.m. Eastern Time. Greg Guenthner, Gunner, good morning, sir. You're probably busy. You're in the chat. You're chatting away. You're chatting
I
and
just
top trading. Hold on.
just closed it for the time being, so we could hop on this. This is a hell of a week to pick to try to do the time change. So we'll see how things go.
Yeah. All right. Well, we'll give everyone a little bit of time here because we are on a different time, but we do calls different times at Paradigm, and I think at 10 a.m. it just gets a little bit more action. I think there's more happening. So we'll see if this works. I know change is never good for everyone, but we'll see if this time can work out, and we'll give it a try here. We have a very interesting week to kick it off here. A lot of action week over week. I don't think any of us would have expected this. And that's what the market likes to do. You know, last Tuesday, that was the day before the Fed hike, or sorry, no hikes, the Fed potential cut, wording of a cut. And then all of a sudden the wheels kind of fell off. And I think the market got a dose of reality with maybe we're in a recession, maybe, and then we get unemployment and then this and that. So we've been through a very interesting few days in the market. So the good part is we've got Gunner live here on the call. We've got markets open, and we're seeing what Gunner, like, I guess just give us a read on, it's the market's been open for 30 minutes after 2 days of pretty like waterfall action that we're seeing. What are you seeing shaping up here in the morning so far?
Well, the market's clearly improving. Those Monday lows were some pretty big extremes. We had that huge volatility spike, obviously.
Hmm.
And it feels like that was a culmination of a bunch of different things. I mean, we can blame it on the escalation of Iran versus Israel that's happening right now and all the threats and moving toward conflict there. We can blame it on the positive and then sharply negative reaction to the Fed and then those jobs numbers that came out on Friday. And
Hmm.
we can also blame it on the yen carry trade imploding, which it's been doing. But that definitely took the spotlight on Sunday night when the Nikkei was down like 12% and futures started tanking and it started spilling over into risk assets across the world. I mean, we saw that like when futures opened on Sunday night, what was the one thing that was really cratering? Bitcoin. Everybody was getting out of crypto,
Hmm.
and Bitcoin briefly tagged, I believe it tagged 50K, and it's off of those lows right now. But you can tell that risk appetites are changing. One of the things I like to say is we need to talk about this whole phenomenon of the rapidly shifting expectations. It's just like we experienced back in January with the semiconductors, but in reverse. So in January, we had the situation where NVIDIA was breaking out and everyone was trying to adjust their profit targets on the roaring AI business. Everybody's models were wrong leading up to that point. So we were in a situation where people thought they had figured out how much money NVIDIA was going to make and where they would be in the AI industry. And those estimates turned out to be wildly low. And then the
Hmm.
market had to very quickly adjust to the new reality. And it took it a while. But in that process, we saw a huge run up in NVIDIA and some of those other AI adjacent semiconductor stocks and some other things. So we're seeing kind of the opposite of that now. Everyone had been talking about how the Fed was engineering a soft landing. I know that was more of the mainstream narrative, but it was the narrative nonetheless that the market was clinging to, that the economy was going to be fine, that the Fed would be able to land the plane, no problem. And then on Wednesday, everybody seemed to got what they wanted to get. Uh, the Fed didn't cut. Powell talked about how they had considered it and they had seriously discussed it, but nobody really voted for it. And he discussed how they're probably going to cut 25 basis points in September. And that's what everybody was kind of expecting, 25, maybe 50. And then we saw the Russell take off, small caps take off. We saw lots of the tech growth names start to really rise Wednesday afternoon following that presser. And then all of a sudden, the bottom fell out and things got really weird on Thursday and Friday. And we were talking about that a lot in chat, how we saw all these abrupt reversals all of a sudden, despite not much changing. And then bad jobs numbers came in on Friday and it really torpedoed the market. I had I had two relatives mention the stock market to me in passing on Friday morning, which I thought was kind of odd. It's early August. It feels like not a lot of people are paying attention to that. One of my cousins was asking like, how far back am I to push my retirement after all this is done? They were like expecting like crash like conditions, and this was before all the yen
Huh.
stuff was really front page back on Friday, and I really perked my ears up at that. I was like, wow, folks are really starting to notice that like things in the economy and the market are a little bit different, and they're noticing some of the red that's creeping into the markets. Is there a bigger issue at float? Is this the sentiment of most market participants? And then everything started imploding on Sunday, and I'm like, okay, here we go. Like maybe something much bigger is changing. We got the huge VIX spike, and then here we are. It seems like the dust is kind of settling, but at the same time, I think we are in a different environment right now. I think we do have to worry more about choppier action. It is August. We have had a huge run up. And again, this, even if we disregard all of the big events, and it does feel like there've been a lot of big events packed into the past week since we last talked on Tuesday. But it does feel like, this is the time of year where we need to bleed off some of that excess enthusiasm, and it's happening. Crypto got its teeth kicked in over the weekend, and it's still trying to, come up off the mat right there. A lot of the stocks that led us higher, the Mag sevens, collectively are down 20% from their highs now. The
Right.
semiconductors have been reset. So now it's just a matter of how long is this downdraft going to continue, and are we going to get some choppy back and forth between now and the fall when the market could potentially catch and turn higher.
Yeah. I mean, just one anecdotal thing, I guess, if you're having friends or relatives or whatever come in and talk to you about markets, I do think we're still in this weird spot. And it's a guess, but this comes from a Jim Rickards theory, right? Of like where the inflation's coming from. The inflation in 2020 and 2021, the people that had the money were your friends, relatives, because everyone's getting $1,200 checks. And they're like, what are you buying? I'm refinancing my house at like nothing. I got all this cash. I'm doing all this. I'm going to buy GameStop or whatever. You flash forward till 2023 and then into 2024. I think the money spigots are coming from, government spending. And then if you think about how government spending works, it's like, people that know people. So high up people or big businesses or people that are on the take here or there. And it's spinning into the economy in a different way so that the people on Main Street, like your friends or relatives, Gunner, they might be saying, like, I'm feeling pain around me. Like the market feels like it might be bad. They might not be tuned in the market, and the market might be staying afloat because the people that have a lot of money, maybe like the one percenters or the people there, maybe they're keeping it propped up. Who knows? There's a lot of stuff going on, but I always think about that of like where the money's coming into the system, and it has definitely changed over the last 3 years pretty heavily. Real quick, I'll run down. We're live here on YouTube. If you want, write into the comments, say hi. If you got any questions for Gunner, or if you have any tickers you want to cover, throw them in there. I'll do a real quick rundown of some of the topics we might cover. Gunnar already talked a little bit about the Fed decision, but we'll talk about that. We'll see where we think we're heading. The idea of shifting expectations. What Nvidia was looking like in the beginning of the year versus now. And Nvidia, by the way, earnings next week, right? I think it's next Thursday or something. So that one should have the biggest target on your calendar ever because whatever. If they beat, great for them. If they miss, good luck to everyone that
I hear
holds.
that they're
And
going to report on the 28th.
okay,
So we
oh,
got a
never
little
mind,
while. We got
not
a couple
next week.
weeks.
We got a little while. All right, we're good to go there. So look into that. Maybe we'll talk carry trade. Maybe we'll talk the VIX spike because that was, I mean, outlandish what happened yesterday. Gunnar has a comment here that says like, don't short into the hole. We'll find out what that means. And then maybe we talk about semiconductors, gold, and maybe some survivors in this type of market. So Gunnar, I'll let you take it from here. I don't know if you want to show a chart, if you want to take us into some top trades or some mindset stuff for this week. Where are you looking?
Well, I want to address something you just said a minute ago about the Fed and expectations. I think it's interesting that everybody's running around like crazy right now when we're in a situation where the S&P is down. I mean, as of today or as of yesterday morning, it was down peak to trough like less than 10%.
Yeah.
from its all-time highs. I mean, I know that's a pretty quick drop, but I think we have a lot of recency bias of stocks only go up, weighing on people's attitudes. There's been all of this clamoring for an emergency rate cut from the Fed. I mean, I might end up eating these words, but I'll throw it out there. I don't think that's going to happen. Why would they? Why would they
Or
do
it'd be
that?
crazy. Like it shouldn't happen.
Yeah, I
It
mean, like
could.
that would be basically them admitting defeat, wouldn't it? I mean, we all look. Powell was always going to be late in raising rates. There was no other way around it because they were so scared of cutting too early and then inflation curving back higher. That was their main fear, which is why
Mhm.
they waited so long to cut in the first place. They wanted to make sure they had licked it and that it was down for good and they could safely start raising rates again. So he was never going to be early. It was always going to be a situation of him being late. And now people are clamoring for like, oh man, they have to cut 50 basis points today. They have to come out next week and cut. I think we're going to be okay if they wait until September to cut. I don't think it's that dire. I don't think things have changed that quickly. We had one
Yeah.
full jobs report. I think the economy is probably a little squishier than most people think, but at the same time, them just sort of coming out and throwing up their hands after saying like everything's good last week and we're ready to start cutting in September to all of a sudden flip the script and be like, oh yeah, because of the market going down, the market's not the economy here. We're gonna institute an emergency cut. I feel like that's a little bit crazy, and I think that's just an overreaction from folks who, again, they're so used to being rewarded for buying every dip, and I think that's the mentality we have to think about when we're looking at the market right now.
Mhm.
Every single time the market has gone red this year, the dip buyers have been rewarded, and they came in yesterday too. I mean, the markets were
Yeah.
really down in the hole
Do you
when
want
they
to show the S&P? I've got it up on my screen, but it's good. And we can even take it back a little bit longer term to show what you're saying. It's like the S&P, if you look at the chart, it's just going up and to the right until just recently. And every time it pulled back, you should have bought it. It's and like Gunner's saying, it's
haven't
it's
had. I mean,
rewarding
look,
those dip
look,
buyers.
yeah, we have the melt up rally that began here in November, and yeah, we had a bit of a pullback in April, but I mean, for the most part, every single dip has been it's been a very smooth trend higher. And so like again, that's recency bias that creeps into how investors feel about things. They're not thinking about how the market was in 2022 when it was falling off the cliff in the spring. They're thinking about how things have been over the past 6, 7, 8 months, and it's been a very smooth ride. I mean, the Nasdaq, even better, absolutely blasting higher here after this relatively small dip. I mean, how far down did the Nasdaq 100 go? um, a 7% decline, that's nothing right there. And we have to remember too that these 5, 7, 9, 10, 12% declines, this is normal action so far. I'm not saying it's not going to turn into something bigger. We don't know what's going to happen, but at the same time, like a 10% drop from the highs in August, that's pretty typical market behavior and really shouldn't lose sight of that. Now, we also got a monstrous VIX spike, which we haven't seen in a very long time. And again, you can go back here and you can see how depressed the VIX has been. And then all of a sudden, things start ramping up and it gets a little volatile out there. I think this could cause some turbulence moving forward, and we have to kind of be aware that we're in choppier market conditions. But I mean, Monday morning when we got that huge flush, I didn't necessarily feel like stepping in front of that train and trading anything right there. I felt like that was a good day to sit on my hands. But if you're going into a day like yesterday and you're like, oh man, this huge spike in volatility, I got to sell everything. I don't know about that. That feels like more like one of those days where if you're going to take a flyer one way or another, that's one of those dips that you try to buy and you set a pretty, a pretty reasonable stop loss, and then you see what happens. I wouldn't try to. That's when I talk about like shorted into the hole. That's not the type of day. That's not the type of gap down where I'd be like, oh man, this is the time to be getting short right here. This market, that feels like more like the kind of day where, I mean, if we had aggressive enough buyers right there, that felt like the kind of day where we could finish, just barely down or break even, and it could have set off a whole other rally right there. It felt more event driven than the beginning of some bigger meltdown. I feel like that's just something we need to be aware of when we're trading right there, not to be swayed so much by those big events and instead, think kind of counterintuitively about how those could end up. And then today, even we have buyers stepping in here. And yeah, it's been a little choppy, but pushing us off the lows right here. It feels like we're kind of settling in. I don't think this move is necessarily over. We're going to have to look and see if this is going to be the type of situation where, maybe we're going to be in, a bit of a downward channel for the rest of this month. Maybe it's not going to be that sharp. Maybe it's going to be something like this, and we're going to be in more of this type of range. Maybe we have to go down here and revisit 5,000 in the S&P. I don't think that would be unreasonable. I think that would be a normal late summer type correction, and then see how that sets us up into mid-September, maybe October. But again, none of this right now feels like the end of the world to me. And until we get more evidence that shows that like things are really starting to fall apart, I would not assume that this is the start of some much bigger downdraft, at least not immediately.
Yeah. I mean, again, I'm just listening because these are the kind of things where I think I'm like the mainstream where it's like this thing could go one way or the other. And at Paradigm, right, we've got the entire Rickards franchise where I'm a firm believer in a lot of the things that we're saying there. And like a lot of the readers there, I'm always kind of waiting for a trapdoor because you just know a lot of this money's made up and that kind of stuff. But what you're saying is accurate. Dip buyers have been rewarded. This move, and I think someone posted it internally at Paradigm, but JC Parrott's someone that well, Gunner. He said something too, like for a bear market, for something like this to happen, like you gotta have stocks like actually sell off. Like they actually have to hit some 52-week lows or this or that. We're not seeing any of that. This is a little teeny blip at the top of a very long run out of 2020 that
I
keeps
think
going up and to the right.
I think you have to realize that, for the most part, stocks tend to not crash from their highs. You need to get some more downside traction before folks really get worried. And again, it goes back to what we were just talking about a few minutes ago, where dip buyers have been rewarded every time. And right now, anybody who bought the open yesterday in hopes of riding some sort of bounce right here is being rewarded. So I don't think the fear is necessarily there just yet. Obviously, like, Thursday, Friday, Monday, that was a pretty big abrupt move lower. But at the same time, I think we need more time. We would need to see this market leak lower and lower and lower into the fall. And then if that's the case, if we do see like, this turn into like 3-4 months of like just grinding downside action, then we can talk about like maybe we're in some sort of a changing environment. If we see like more stocks pushing their lows and that sort of thing, we can maybe open up the possibility of there being some sort of, big event that leads to a more crashy action, I would say. But like from here, again, we have to put it all into context. And from everything that I'm seeing, even though there's a very loud news cycle happening and there's a lot going on in the world and things are starting to feel a little bit bearish, I don't think we should be jumping the gun and saying that this, that this bull run is over just yet. We had an incredibly strong first half of the year. And for, the leading sectors, the mags and everything to be giving back some, I mean, are we anywhere close to being red for the year for the Magnificent Seven stocks? This is the Roundhill Magnificent Seven ETF. Absolutely not. We got a bit of a reset here, but at the same time, not falling off the face of the earth. Semiconductors, they bounce right before hitting 200. So they're bouncing right here at these April lows after flaming out. Is this part of like a choppier reset? Could these stocks move sideways for a few months and still be fine? Absolutely. Still looking good year to date. So let's not lose sight of the bigger picture here. I think shorter term trading might get a little dicier here in August, if we really are in this back and forth chop. But as far as these bigger trends, I don't think anything is like completely broken just yet.
Yeah. Could we talk about it? You just addressed it, but I want to address it again, maybe more like a more aggressive question coming at you. And I think of it from the Rickards camp. We had a comment from Steve in there. He's like, guys, you're not looking at the macro conditions. Like it's ugly out there, right? He's talking about like dollar losing its reserve currency stats, all these things that are very rational, fundamental arguments that are scary, right? Economy's kind of bad. Society's kind of, fractured. and then you've got all these global things happening. Like, how do you you just kind of answered a bit. Like, again, how do you come back at that kind of thing? Like, because your mindset is very important here for this type of a move, because uh, it's different than that macro viewpoint.
I mean, some of that is could very well be true. I'm not saying that that's not true, but I'm saying that we're going to start seeing that play out more in price before, there's some bigger rollover, bigger move lower in the markets. Um, I think that goes back to just how I'm saying like markets rarely crash from, their all-time highs, going back to something like even like the 1987 crash, which is like painted historically as this like, all of a sudden one day stocks just fell off a cliff and this huge one day crash happened. Well, yeah, it did, but stocks were falling off of their highs and were breaking below key support for weeks before that crash actually happened. So again, I'm going to need to see more evidence from price that something is going on and something is shifting in the underlying environment before we can
Yeah.
say definitively that those things are going to matter right now, because we all know how the market operates. It goes back to what we were saying about the idea of the soft landing and how that narrative all of a sudden kind of was jolted, was shaken out of the market, over the course of like 2 trading days. Um, Things can be true and not matter until they matter. And that's how the market views things, and that's how people react. All these things happening out there. It's like going back to COVID. COVID didn't just all of a sudden appear in mid-March on one day, and then people said, "Oh my God, what's this?" and then start selling. The media was starting to talk about COVID in late 2019. It had to build up until that crash moment when everyone all of a sudden decided this is my number one concern collectively. We as a society said, like holy crap, this is the biggest thing that's going to affect us right now, and I need to sell and get out of the way. And we all decided that at the exact same time. But it took months of buildup. It took almost a quarter of buildup for that to materialize in price. And that's the same throughout history. If you look at some of these events happening, there's big surprises, there's big market jolts that do occur that cause these big volatility spikes. But as far as like major changes in trend like that, those stories are going to crop up, and then we're going to need to start seeing it reflected in price before we can definitively say like this is going to be something that's going to matter very much to the market right now and cause some very immediate pain.
Yeah. And even fundamentally speaking, right, if you look at some of these are negative arguments from the macro side, like, oh my gosh, the dollar could lose reserve currency, like the dollar will tank. And then, oh my gosh, inflation could come and it'll crush this and that. If you think about those two things, now there's many more things going on, but those two things could just mean that the market is going to skyrocket higher because the dollar's crashing, which makes anything but the dollar go up. And then also, if inflation hits with Trump or a Kamala presidency, which I think is going to happen, that could just make things go up too. It's bad and it sucks. And there's going to be winners and losers, but I don't know if stocks are the losers. And again, I'm not saying that I would be running out and buying today's market either. But there's just these arguments. It's like just because the dollar crashes doesn't mean that the stock market goes down. That could mean the stock market actually goes up. Like those
Yeah,
are
and
all
also,
important things to
and
think
also
about and keep
if
in
you're
mind.
if you're worried about inflation, if you're worried about your dollar being worth less, then you probably want to be in the stock market
Yeah.
to protect yourself from that. I mean, that's how you protect yourself from inflation, right? And
Yeah.
going back to the dollar and all that, I mean, like, and we have the pressure of the yen now, like messing with that market, and we have a situation too where we have gold pushing higher, and the gold chart really doesn't look that bad, in the
Yeah.
grand scheme of things. I mean, yeah, it's back down here in this range right here, and maybe we need to start thinking about like, you know, um, this big round number 2,500 uh, up here, and if and when it's going to start attacking that, and it's been moving along with the dollar lower right here, but I think extenuating circumstances in the short term. Um, but this trade isn't dead yet, and I think we should be paying attention to this because we see these big jolts that happened in the market, and it was a pretty subdued move in gold futures so far, and GDX doesn't look too terrible either right here. I know we talked about our bounce zone right there.
Look, it's back in.
Settle, we're kind of back into it, and there's going to be, I think, just due to how crazy things have been over the past few days, going back to like Thursday, Friday, I think we're going to see a lot of charts that look like they were breaking and then, snap right back. I know we talk about PLTR a lot, but I mean, look at the crazy candles that have been produced by this stock recently. We have these candles that are just sort of like on their own out here in their own little islands, like the earnings candle back here from May. And then there was this humongous meltdown yesterday where it opened down near 21 bucks and then pushed higher and only closed lower by like 2.5% on the day. And then, hey, guess what? It's right back here, back above 27 bucks, up 10% after some really bang up earnings. So I mean, it can be a difficult stock to trade. Obviously, we know that. We got shaken out of a trade after it took a hit in late July right here, and then gapped lower here to start August. But at the same time, I mean, like, we're going to see a lot of like weird action, I think, in the markets right now, just due to that volatility spike, and we're just going to have to try to reconcile that and move forward with the best looking charts to the best of our ability.
Yeah. And I've said this a bunch in the week over week calls, but I own Palantir, and it's one of those ones where I'm just happy I own it and I hold it because it's nuts. I
Yeah,
just don't really do anything right. I haven't done anything with it in the last it's probably been at least 18 months I've been holding it or whatever. And it's just kind of, you're just watching it and you're like, oh my God, ooh, went down that low. But like the concept is still there. And we talked about it a few weeks ago. It's like, what do they do? It's like, oh, it's AI and government spending combined in a surveillance state, but they're going to probably make money. So they're decent, just sort of buy and hold and ride this thing.
Yeah, I think that works for them and against them. I think that people have trouble saying what they do because it's kind of like it's Big Brother meets AI meets defense meets tech. Maybe it checks too many boxes there, but at the same time, I think it makes a lot of people short lists of like what's going to be the next big mega cap that emerges in this market over the next decade. I think there would be a lot of very smart people that would agree that PLTR should make that short list, should be in the top five ideas of next world beater stock. So I mean, the fact that they produced some really good earnings in what's been kind of a weird earnings season, I think speaks volumes to the company. And yeah, I think also because, and we've talked about this before, this stock has so many eyeballs on it. That it does tend to be kind of a crazy trader, and it is one of those stocks. Unfortunately, I mean, I like the stock. I like trying to trade it sometimes if it sets up just right, but it's one of those stocks that maybe is just better to buy and put in your back pocket and just don't look at the chart. One of those stocks where you can just sort of buy some of these crazy dips and then see what happens. I wrote about that a little bit today too, about how to approach like a big volatility event like we saw yesterday, depending upon what your time frame would be. We talk about not shorting into the hole, not like putting on some big short position after the market gaps down, to such an extreme level. But if you're a longer term minded investor, like you said, Matt, if like PLTR, like the type of stock that you want to own, those are the days. And this is a little bit of Monday morning quarterbacking, obviously, because in a unique circumstance, because it did have earnings that just popped up. But these days where you see these monstrous dips in these stocks, that's the time to start nibbling on the long side on some of these plays. If there was anything to do yesterday morning, it would be calmly go through some of your favorite ideas, maybe some stocks that you missed out on or that got away from you, at some point during the earlier part of the year when things were just moving straight up. Maybe you were excited about semiconductors at some point, when they were just ramping higher, and go back and think about how you were feeling about the semis back in February or back in March, and then you say, "Oh, I'll wait until things settle down a bit." Well, things have settled down a bit right now. I'm not saying you go out and buy a full position, and assume it's just going to jet higher, but this is a pretty substantial correction from its highs there. If there's still stocks in here where you believe in their story and you think they're going to be long-term winners, then this is the time to be buying them, where you don't have to feel like you're chasing, and where maybe you can, if you're feeling a bit more tactical, set some stops at those Monday lows and see where they take you. Much better strategy in the long term than, trying to like, grab at those highs, or like, oh, the stocks, run higher for, 10 trading days in a row. I just have, you have this FOMO, this fear of missing out, where you just have to grab on and buy them. If you can control your emotions a little bit better, and you can reassess at times like this and say, okay, it's August, market's gotten volatile, some of my favorite stocks are down. This is the time I want to add shares, or this is the time I can add shares safely for a more tactical position trade, and then set some stops. By all means, try to put trades like that on in these conditions, instead of like just running with your emotions with the herd right there, and just selling everything on a day where you get this historical type of volatility spike.
Yep. Any other sectors you like? I feel like defense was looking pretty decent. That wasn't on your list of stuff, but like, is there anything else that you like? Because gold obviously holding up well, still looks decent and constructive. I mean, everything's kind of feeling things out from yesterday and starting to look more constructive anyway. Where do you want to go next?
Well, yeah, I mean, there's some emerging trends that look kind of questionable. Like if we look at something like Tesla, I know we've talked about Tesla a lot, but I
Yeah,
think
I own Tesla. And again, it's another long term. I feel like full self-driving is going to work.
right,
It is
yeah,
what it
I
is.
think there's good reasons to own that, but I mean, like, I think this kind of illustrates the type of market that we're in, and that we've kind of been in even before some of this extreme volatility creeped in this week. But I mean, we were all over this breakout right here since since the stock really started curling back toward $200 back in late June. Is something we talked a lot about, and then we saw this monster breakout right here. We're right back to the start on something like this, and so now it feels like we're in this do or die zone, for a lot of plays like this. It's possible, and we can make a bunch of different arguments about Tesla here. Was this just like a big one-off, you know, oversold bounce where folks got a little bit too excited, too ahead of themselves, and then earnings hit and they weren't that great, and now reality is catching up to it, and it's going to sink back into this range and then fall apart again? I think that's possible. Or, is this a story like Matt said, where, we're going to be gearing up for, I think, Matt, and correct me if I'm wrong here, um, just to bring you back into this conversation real quick. Aren't we supposed to get some sort of full self-driving announcement at some point this month or something? Something's happening in August with Tesla, or am I?
Maybe late. There was a new update. Enrique's writing in the chat about it too. Like
Okay.
there was a new update that came out. Again, it's like the full self-driving day, Tesla's day, was supposed to be 8/8, and they
And
kicked it.
they bumped it to October, right?
Yeah, to October. But I think there's some other update coming as well.
Okay.
But again, you look at the kicking of that as a Tesla shareholder. I don't look at that as negative. I'm like, I think he wants to actually put on a show. Whereas, like, remember, like Cybertruck again. I think they look dumb. Yada yada. Remember, he had that day where he like threw a rock at it, it broke,
Oh yeah, he
broke
threw
the
a metal
window.
ball through the window and it
He's
smashed the
probably
window.
like, you know what? I don't feel like doing that. I'd rather have a car that can actually drive, full self-driving.
Yeah.
And again, I don't want to be up in a pulpit here for Tesla because it is what it is. But this is one of those things that over time you look at it and you're like, what is Tesla doing that could create a barrier or some sort of very valuable thing? Amazon did it because they just took over the market at a loss leader and just now have all these people on Prime, and people are just like, I go to my Amazon app to get the things, right? That's a pretty hard barrier. You could get some of those people out of it, but it's hard. Tesla's got a wind at its back. Sorry, Amazon. Tesla could have a wind at its back because they are going to have this data that right now is free from Enrique's friend. I've got friends. They're turning on full self-driving, and guess what it does? It reports everything to Tesla. So
Yeah.
they're going to have the uncategorically like best level of full self-driving data that exists. They could license it, they could keep it to themselves, they could do whatever, and it's all free right now because they have all these little Tesla minions out there driving around without a steering wheel on. Like that's very, very interesting to me. And you look at the future, do people want cars that drive themselves? Yes.
Yeah.
Maybe Tesla gets
And
them.
I
All
think
right,
I
I'll
think
shut
all of
up.
that I think all of that could be true. Um, But when you have charts like this where
Right.
I'm not trying to take a, I'm not trying to destroy your argument here. I'm just
No,
talking.
it's easy to destroy. I'm just like buying it for like 'cause I like it.
Oh no, I'm
It's
just
not a
taking
chart.
I'm taking like a purely price driven approach to what I'm seeing here. When you have like a big run up here and it gives everything back, I think there's a lot of folks that are maybe have been trapped in this move lower right here, whether it was this gap lower on earnings, and then they were kind of hoping that it would come out of that spiral. Now we have 4 days of some pretty nasty action right here in Tesla. Well, we're right back here down to the scene of the crime, just below $200. I think what it does from here is going to be pretty critical, and we're seeing a lot of charts like this where it looked like they were going to catch higher in July. Something sparked them. There's a lot of tech growth that looked like it was going to come back to life and try to extend in July, and then things started falling apart again. If they don't catch here, I think there's more pain, at least in the short term. And I don't think it's unreasonable to think that that's going to be the case. I think the biggest elephant in the room right now, chart that looks kind of like this, that's doing that right now, is going to be small caps. Um, I mean, this was an incredible move. And if we take out what's happened since Thursday right here, this looked like we were about to break out from some sort of a bull flag pattern right here, a pennant, and
Mhm.
and push higher. It seemed like a foregone conclusion, and it started breaking out after the Powell presser on Wednesday. That's this big upper wick on this candle right here that you can see. I mean, it looked like it was taking off and leaving the station right here. And I think we might have even talked about it that afternoon. I said, it looks like small caps are, leaving the station. Looks like they're going again. And this is the real deal. And we're going to see another move similar to this, where this thing just rips and takes off for the month of August. And we see this big rotation because those rotation themes that we were talking about seem to be catching. And then it started falling from those highs, and it closed right around break even. And so it lost all that intraday momentum by 4 p.m. And then the next day really fell off a cliff, down 3%. And then on Friday, down another 3.5%, right back down to, where it looked like it's got to bounce or something's going to have to happen here. And then Monday happens and we get another 3% down day in IWM. It's trying to claw off those lows right now. Tons of gaps to fill all along here. So there's going to be all kinds of volume pockets in this trade right here. We're going to have to really watch closely to see how messy this gets, because I mean, I don't see how it can get any messier than something like this. There's going to be a lot of people that are trapped from up here that are going to want to sell at some points along here. We're going to see how strong the buyers come in the days ahead. But I feel like these rotation trades, just because of everything that's happened, have been just put on hold because we're waiting to see how they resolve. It's been a long time since I've seen fake outs to these extremes in the market. And maybe that speaks to the idea that, to the bigger idea that we were talking about. I know this is kind of rudimentary, but just the buyers running out of juice here and,
Mhm.
doing other things in August. I mean, should we be lumping, the small cap trade in with the tech growth and in with the crypto um, right now? Because I mean, I know there's some crypto charts that don't look super, super terrible, but this move in Bitcoin, it's been ugly, right? I mean, like this was quite
Yeah.
the waterfall lower, and it feels like every time Bitcoin is trying to set back up and really push back above 70, it's running into just waves and waves of sellers. We tried to blame this wave of selling right here on what, Germany? Was that the story right there? This was the Germans dumping their Bitcoin,
Yeah.
which I mean may or may not have caused some short-term turbulence in the market. I don't know. I can't say definitively if that's the case. And we got a rally off of there, and then it looked like, oh hey, maybe we are going to test the top of that range. If it does, we said this. If it breaks 70, then it's probably going to test those all-time highs. It's going to go. It barely tagged 70K at the end of July before it abruptly reversed lower, and we really didn't get it any upside momentum since then. Today is really the first day where it's trying to catch and move higher. There was a point, and I don't know how long it stayed down here, but there was a point yesterday where it looked like it was just going to totally fall apart. It was below 50K for a hot minute. I'll pull up a 5 minute just to see how long it hung out uh, down there. So yeah, I mean, like it dropped down a couple times in Monday below 50 before encountering some buyers right there. So I
Mhm.
mean, you know, this chart for the time being looks pretty broken to me. We're gonna have to see how it resolves here. You know, is this going to be a case where okay, we were running into some sellers at 70K? Are we going to be running into sellers back at 60K? Are people going to be wanting to get out while the getting is good right there? I don't know. So it'll be
I just, if you want to, I just slacked you an image. I don't know if you can pull it onto your shared screen.
I,
That's other deep analysis as well.
I don't think I can. You'll have to share it. But
All right. Well, then I'll share my screen then, if you let me do it.
yeah, I remember seeing that. I think somebody shared that with us like a couple weeks ago. But yeah, it feels like
Here, let me unshare your screen. I'll share my screen real quick.
all right.
Sorry, this is why you got to kick me off these calls, dude.
You just want to share me
Here's the real analysis. This is just the Grim Reaper with Bitcoin showing up at the door of 70K. And then just
every turn.
every
And
time, it's just a bloody mess.
I mean, it's
All
been
right, go back to some charts, but that's some humor for the Bitcoin holders out there. Because I mean, again, Bitcoin could be the future of money, something.
well, and like you said, like the Reaper showing up at 70K, it's been doing that since what, March?
Yeah,
Um, you know, I mean, yeah, it did move to like what 73. Didn't stay up there very long.
yeah, Reaper.
So so the Reaper definitely has been coming down pretty hard at this 70K range. I mean, this is the line right here at 70K. Every time, you know, you think it's going to get some traction above that mark. I mean, we were pretty convinced that we were going to see a you know, a potential breakout here all the way back in June. That was 2 months ago. We were expecting some sort of move, you know, we were on the lookout at least for some sort of move back to 73K and beyond, you know, and look where we are now. So I think the big questions here are, was that enough? You know, I mean, buyers did come in pretty strongly down here at 50, and we're back at 56 right now, up a couple thousand, you know, over the past 12 hours or so in in Bitcoin. Was that enough of a flush to get this thing moving again? I think it's just going to be a mess. I mean, I think that's the safest bet at this point. It's just going to get messy, and then you know, if it can't break back above 60 and get back into that range in a hurry, then I think maybe it's gonna find itself down here in a lower range for a while, and you know, again, bleeding off a lot of excess enthusiasm right there. I mean, how far ahead of itself did the market get over the first 6 months of the year, and how much are we going to have to endure as far as like, you know, choppy sideways action here as we get into like, you know, maybe a little bit of seasonal weakness, and also, you know, talking about how quickly things are changing. It feels like just a couple weeks ago where, you know, and this is not a political statement. This is just how things were feeling. It felt like a Trump landslide, and it felt like the market was adjusting to a Trump landslide
Peak
um,
Trump.
back before Biden dropped out of the race, and now all of a sudden it's looking like all of the mainstream polls are saying toss up again, um, and some are predicting a Harris victory. So you know, I think that's also, you know, more fuel to the fire of like, hey, things are in flux right now, and the market doesn't really know how to react to things. Uh, and maybe that means choppier action heading into November too. So we're just gonna have to see.
Yeah. Yeah. The market hates uncertainty. And there are two things that are very uncertain. It's like, are we in a recession and what's the economy actually doing? Because you get all these like fake stats from the government and this and that, and that'll lead to rates, which again, it's kind of uncertain. And then the other part is political uncertainty, where I said peak Trump, and I mean that from a sentiment standpoint. It's just so hard for Trump to get heavier excitement in his camp than like beating Biden in a debate, getting shot the next weekend or whatever, a couple weeks later. And then all of a sudden it's like the narrative kind of turned to like, oh, Kamala's in. And now that has kind of run where it's, you know, people are saying this could be a, you know, a neck and neck race. And again, there's a couple things in the next few weeks and months that could be big, again, just like stuff to keep on your calendar. One, as we talked about, it was Nvidia earnings. And that's mainly just like on the downside. You just got to keep your eyes and your wits about you there. And then the other part is like whenever that debate is with Trump and Kamala. If Kamala gets a few zingers in or something, that's going to make it seem like this thing is a complete toss up, and the market probably won't like that. So again, those are just big things to throw on the calendar because they can move markets. Because we saw the markets move up because I think the market thought, oh, Trump is going to win in a landslide, and you
Yeah.
saw several weeks of heavy duty buying into tech, buying into whatever, and that's because he's probably going to be inflationary, and he's probably going to be supportive of X, Y, and Z, and people kind of know um, where they were going to deploy money. So anyway, just stuff to keep an eye on. Do we want to take a look at some charts from the chat, Gunner?
Yeah, sure, absolutely. We can do that.
One of them is Vimeo. I think that was recommended somewhere
Let's
recently,
take our
but someone said that chart's looking decent, and it is. It's Vimeo.
Yeah,
It's
that's a nice.
looking like it survived, right? Like it does.
How is this only a $4 stock? I feel like it used to be more expensive. What happens about yeah, there we go. I
Yeah.
was like, I remember this stock being a lot pricier. It definitely was back in 2021. Good grief.
Look at
Uh
that thing.
yeah, I mean, it's working on some sort of a base right here. Look at this stuff. God,
What is that?
that would have
That's just
stunk trying to buy
that's,
that breakout. And then what happened here? Something happened where it was down 27% in a day right there. It wasn't earnings
what
because
day was that?
it was see if I can it was March 25th. I don't know what's going on there. But
Where that was the day. Now, again, this is nothing to do with the stock. This is Matt's opinion. This is blah blah blah, but it's true. We had that event with Altucher in Austin, Texas. It was a live streamed event from South by Southwest, and the feed went down. Guess who was running the feed? It's our boy Vimeo.
that's what caused that's what
I don't know. I don't. Whatever South by Southwest was, if
uh,
that was around that date, like that was, they had a very large black, like like when you go on the site to see like what's down, it was like Vimeo was down all over the place.
yeah.
So they're very powerful. It's a video service, by the way.
Yeah,
Like
no,
you can
yeah.
upload Vimeos there, stream stuff, all that kind of stuff. But yeah, that's interesting. They're only $4, but maybe it's just because they have ups and downs and they're
Yeah. I guess
stuff
if
like
we
that.
kind of ignore this, whatever this was right here, this pop and drop, I mean, it is trying to come out of the space right here, and maybe it has enough juice to get it up into the 460s. I, you know, I assume this is an earnings related bounce right here. It looks like it beat with a nice surprise. That's good to see. If it can post a decent close here, maybe it does have enough to
Yeah.
get a more sustained rally.
And
Kind of
that
a
March date that wasn't South by Southwest. That was a few weeks after. So there's some other thing. They might have had some other
kind of a
outage or
broken stock.
something.
I would be very interested to see like what it does like right around here. Like I'm trying to ignore that outlier event, whatever that thing was, since I don't know. But like I feel like 470 seems to be the area where it's getting turned south. Maybe it has enough to get up. I mean, that's quite a move for a $4 stock. So maybe it's got the juice to rally back to that area over the next few weeks. Then that would be the spot I would be watching.
Yeah.
But again, kind of a small stock. Looks pretty volatile. Best of luck on that one.
Yeah. Yeah. And it looks like it was Paradigm Mastermind Group. Again, this isn't a place where we just give out tickers all the time, but that was one, I believe, for the mastermind group that we put on from Paradigm. So I knew it was somewhere. Thanks for writing in, Steve-O, and some of the folks on chat. Gunnar, I don't know if you want to do it. We talked about the bowl economy, the lunch bowl economy with Cava or CMG.
Yeah, how are they doing?
Um,
I haven't looked at them this week.
I don't know. I mean, it's something to look at. And then I think Holly had some tickers earlier, like, some of the regular ones like FCX.
Yeah, I remember talking about this one, how it looked like it was going to break out, and then the bowl economy went south. Remember, we discussed that last week or the week before.
Yeah.
Because this has definitely been the hot stock that everybody's been talking about, and how like, oh, its growth is like even better than Chipotle's was back in the early days and all that. Yeah, that all might be true. I mean, I like the action, on a day like today. Maybe this has enough snapback in it to run into earnings. It does have earnings on the 22nd, so it does have some time. I'd be much more excited about if it was like above like those swing highs near like 87. That's not that far from here though, really.
Hmm.
maybe this was just kind of a hard reset along the road here. If you're looking at this optimistically, I mean, like that's not a bad look. That's not a bad look right there. When you have a day where it opened all the way down at 73, and then closed closer to 80, and then it's extending so far today as if this drop didn't happen. It's getting back up there, back in range toward those Thursday highs near 84. That's really not that bad. And if anybody was short, they're trapped, over these past couple of days now. So, I don't hate it really.
Yeah.
I don't
They
hate
could
it.
have like that's one of the companies that could have like a nice a oh, it's tradable. It's kind of guesswork, so it's not. Sorry, I use tradable lightly in my line of work. But they could have something nice where they've expanded all these stores. Maybe they take a breather of some of those costs, and all of a sudden they start sucking up some of that nice, like, I mean, the Cava by us, they have lines out the door for lunchtime. So it's possible they could throw up an earnings beat at some point where it's just like they just go bonkers, whether this is a long-term buy and hold or not. But I could see that happening because that's what happened with like CMG. It was just like one of those times where way early on in CMG, it was like, oh my gosh, they're rolling out tons of restaurants and people are buying the crap out of their food.
Yeah, CMG
So
very similar look too. I mean, it's pulled back a lot more than Cava, but you have the big nasty drop that gets bought immediately and pushed up. I mean, it was only down. It was down less than 1% yesterday when all was said and done, and now it's extending higher today. I don't know. Oh, we got some positive press on the stock perhaps right here, but I mean, this is a situation where maybe this one's finished. Maybe that little downdraft there is done, and there's some serious buying stepping in here. They're trying to close this gap. If it gets above like the mid 55s, this thing could really rock and roll. I mean, the bull economy might be back. That might have just been a little bump in the road. Secular bull market for food in bowl form, I think. Can we declare that? It's definitely in a secular bull market around here. We only eat food out of bowls. That's all. That's the only way we'll consume calories.
I'm just saying, in between, bowl is right in between a plate, done, worthless. That little Chinese food bucket thing, too hard.
Yeah.
Like honey grows down the road too hard. You can't eat that little thing. Right in between is the sweet spot, the bowl economy.
Yep. Yep. The bowl economy. Very true.
What about FCX? Did you looked at gold? Yeah, you looked at gold and GDX. Maybe FCX, just take a look at
as an
that.
aside, like I still like GDX here. I think that
I do too.
we're still in that bounce zone. We obviously we faked lower right there. I think it's very possible that gold catches higher here. In the weeks ahead, it wouldn't surprise me a bit. FCX, copper, I don't know, man. Like copper's getting creamed right now. People got way too bulled up on copper, I guess.
Dude, I don't know what it is. I don't know if like there's like I see a bunch of emails and stuff about copper and it's like, oh, the new boom. I don't know if that's like marketing or what it is, but like
Yeah.
that chart looks atrocious.
It looks kind of rough. I mean, like it would be better if it had bounced a little bit higher here. It seems to be eating down into this range. I mean, this is a hell of a
Oh, and
reverse.
that's FCX. So it's FCX is all
Yeah.
right. That still looks bad, but what does
Yeah,
copper look like?
kind of copper's a bit of a mess. We can look at it over here.
You might get some support at 4, but it like, I mean, it magneted itself right back to 4.
Yeah, I mean it's 100% give back,
Yeah.
And now we're back down below the 200-day moving average here. It's just like,
There's no one that could say anything positive is happening with copper right now. Like again, you can make up stories, which I like to do, right? Fundamentally, but like that chart is horrible. It went to $5 and now it's back to 4. And 4 was like the like that was what everyone was waiting for it to break out of. Like that's an ugly chart. Maybe
yeah,
it holds 4, but
and like like you could say like, and I think I said this before on a different call. Was Dr. Copper right? About the global economy. Everybody got all bulled up, and then it's back in the summer, it was like, no, things aren't as good as you think they are. And I did see there was a bunch of negative macro type pieces on copper demand in places like China, like going down the tubes. I take all that stuff with a grain of salt, but I mean, price here, it definitely got ahead of itself in a big way. And we're
use
right
me
back
as a
to where we started.
contrarian indicator too. Like you're at the bottom of the RSI. Like maybe now is a decent time to
Well, yeah, I mean,
bottom
I
out here, copper. But again, there's no momentum. This is
No,
a bottom fishing
no,
operation.
it's definitely it is definitely reset from the spring. I think that's the that's the truest thing you could say about what's happened with copper right here. But look at this. I mean, the market looked a little bit dicey earlier this morning, like it wasn't going to catch, and then it did. And we get a majority of stocks advancing here. It's not looking like the end of the world, despite how things were just 25, 26 hours ago. Um, so like I said, we could be in the midst of just entering into a more choppy period. Um, for stocks, this could be an opportunity to try to grab some stuff on a dip if you're a longer term minded investor. But hey, man, it's August, and I don't think it's time to just blindly trust the moves higher or lower just yet.
Yeah. Couple things. One question coming in. Can you explain, I think this was on GDX or gold, GDX, the bounce zone. I know you explained it when you first drew it on there a little while ago, but like, could you explain just sort of what that area is for you?
Yeah, I just felt like if gold was going to, and I'll remove the text so we can see everything. Um, and I wrote about this a couple weeks ago when we were in this area right here. I felt that if if gold was going to maintain its upward trajectory and miners were going to continue to look very constructive in the short term, that I wanted to see some type of a higher low materialize in between this $35, $36 roughly area, which is where it had run into some resistance on the way up. It's where we saw a bit of a reversal here back in May. And it just felt like this was the do or die spot where, okay, this is going to keep us from eating into the 33s and being into more of a sideways range. And lo and behold, we got a fake out below those levels yesterday morning, and it ended up right back here in the middle. I'll feel much better about it if we get out of the bounce zone intact. So if we can see GDX over the next week or two build up and get back here into the 37 range, then it feels like it's going to be, like, okay, this is turning bullish again, and maybe gold is pushing higher then. Maybe some of the miners are looking good. I know miners are still popping up on my screen. And one of the things that I was talking about in chat and then earlier in the call was, trying to find those charts that don't look like the semiconductors and don't look like, the NASDAQ, the stuff that sort of it's this Wednesday through Monday downdraft was more just a blip and things are moving higher. I think what was one of the ones that I saw earlier? I think Anglo Gold looks pretty good. Look at how it dropped yesterday, and now it's gapped higher right back into this range right here. So something like this, I'm looking at it and I'm thinking like, all right, if this can kind of break higher, and if we ignore, maybe maybe ignore some of the pieces of like yesterday's like early morning lows, then we're still kind of flagging here, and this could break out. And if it gets above 29, maybe that's good enough to really trigger the next move higher in a miner like this. And so like again, like some of these are setting up really well. I know that Newmont was a big laggard for a while, and it's setting up really nicely too. It's still above 44. Doesn't look nearly as awful as some of the stuff that really retreated Thursday, Friday, Monday, right there. I mean, yes, it ended the day down on Friday. It was down 3% yesterday, but still well within this range here, well above our line at $44. It feels like that base breakout is still very much intact right there. Looking to see what it does as it reapproaches $50 again. And like we've talked about before, like this one was really slow to get going with the rest of the miners right here. I feel like the miners a lot of them were turning much higher while Newmont was plunging into these lows back in February. So it's good to see the big boy here turn things around, and maybe there's a trade there on the long side in the days ahead.
Yep. Two other things, we're running a little bit low on time, but two other tickers. These are more eye candy. One of them's ASTS. That's a
Wow, this one again.
week over week over week favorite.
I don't like looking at stocks that are exploding higher that I'm not involved in. don't know why you're doing this to me.
This was actually from the chat,
I
okay?
know.
There's now some following. Now, obviously, I own shares in ASTS. I like it. It's the satellite company that's hopefully going to take over, make all cell phone towers useless. And look at it, heading to the moon. That one was green yesterday.
Where was my buy alert down here before earnings?
No,
Why didn't
I
I
can't.
receive that?
I don't buy it down there. I don't know. It's too far down. I was in the middle of that uptrend, and I just closed my eyes. That's like a Palantir and ASTS. There's not a great time to buy these things. Like it's not easy, and they're weird. The other one
And just
was
for clarification,
Lumen.
this is not Virgin Galactic. This is not the space SPAC.
Yeah, no one likes that one.
Nobody likes it.
Lumen is the one that we talked about that one
Yeah,
last
I
week.
think so. What's the ticker?
LUMN.
Somebody was mentioning that in chat today. This is another one. This is another one where somebody
I don't
mentioned.
have this one. I wish I did. This is Little Corning Jr. This is the
Right.
one
Yeah.
that's going
Yeah.
to
You were telling
connect the
me.
data centers and all the AI, like all the people making their little AI generated images have to connect the data centers and stuff. This is the company that I guess they're going to do it. I don't know,
It's
but
up
the chart looks
88% today on earnings, I guess.
I don't know, dude. You can't that one's a rocket. It's like an opposite of a falling knife. I don't know how you buy something like that one,
It's
but
reported earnings tonight. So,
good luck.
yeah.
Anyway, those were eye candy. So Gunner, I'll give you the last word here. Crazy week over week. We got a bunch of different setup. What I like about you, and you always do this, you have a very good gravity. You have a very good system that you stick to, and you're very chart focused as opposed to me. I'm in their stories and narratives and all that kind of stuff. Sometimes it works, sometimes it doesn't. So that being said, we appreciate all the sage advice and the gravity and direction. So what's the last word? What should we look for in between now and next Tuesday?
Well, I'm looking to see how we come out of this, obviously. We had a volatility event. I think it's safe to call it that on Monday. Um, uh, the common sense, maybe not common sense, but my guess is that we don't just magically shoot to all-time highs from here, especially not in August. I think it's a possibility. But I think we should be looking for a little more choppier action. I really, really am interested to see what happens with some of the rotation ideas. Does IWM actually catch and this just turn into just a big messy non-event, and we end up pushing back higher from here, or is this leading us to more false starts, more bad news for small caps, which just can't seem to win every time it looks like they're going to become leaders, they get smashed back into oblivion. Can some of these like growth stocks that have been pummeled, can they right the ship? I mean, ARC kind of use this as my hype growth proxy right here. Absolutely decimated over the past 4 sessions. It is attempting to come back today, but it looks kind of broken to me. Down here, does Kathy lose again? And do we see these stocks just continue to just run to oblivion? Matt and I were chatting about this chart earlier today. Zoom is zooming down
Unbelievable.
to new lows once again. I don't know how involved ARK is. I haven't looked to see how involved they are in this stock right now. But this is a Kathy special right here, and one of the biggest blown leads in history, maybe.
That's what, have you seen the t-shirt that's like Britain blew a 13 colony lead? Like it's like a joke that like they had 13 colonies and then they lost us and we're America now. This
Yeah,
is worse than that. You were
yeah,
given the entire world into your tech stack to do, and we're on Zoom right now, and Zoom hardly ever fails. It is
yeah,
awesome.
yeah,
And somehow they cannot make a stock go up.
yeah. I mean, maybe it gets bought. Maybe that's the end result of this. I don't know, but
Salesforce. Salesforce bought Slack, right?
right, yeah. So I mean, maybe there's some tech company that's going to have
Heard it here first, folks.
runs out of ideas and feels the need to buy Zoom for some type of premium that's not really much
What's
for
the
it.
market cap? Well, 17 billion. That's not bad.
That's nothing. Who doesn't have
Not a
17
bad
million
price.
to toss around?
Not a bad price.
Make it 30, and then you got yourself a deal, right? So we'll see how that. But I mean, this chart obviously is gross, and I'm not looking to trade this thing to the upside for any type of reversal. I don't see any evidence of that yet, and it has earnings coming up too, which it seems terrible. So let's just
I
avoid
might,
that entirely.
full disclosure, I might buy this.
Oh no,
Like, I
you
might
can't
just,
help
it's going to
yourself.
be one of those ones. It makes no sense, but it's one of those ones you just kind of buy it, close your eyes, and wait a year. Like this stock, there's too many people that use Zoom. It's too good of a system to have this crappy of a chart.
I don't know. There's lots of good companies that have some poor looking stocks. That happens. So
All right, not happy about it.
we'll see. But let me know what that trade is because I would love to track that. I don't think I'm going to tell you on
It's
that.
just going to be a buy. I'm just going to buy the stock and sit around and then cross my fingers. It'll be like a one
You're not going to buy calls.
quarter or 1/10 position, like a quarter position of a normal holding.
We'll see how that works out.
Yeah, probably great. All right, everyone. All sorts of people in the chat today. Enrique, thank you. Steve, lots of good comments. Steve O, good comments. Holly, as always, good comments. We appreciate you guys. Patrick had some comments in there, so thanks so much everybody for adding to the comments, adding tickers in, and different topics for us. Gunner, we appreciate it. We will
Oh,
see you next week on Top Trades. Otherwise, we'll see everyone at the trading desk. Chat's open. See y'all.